All right, joining us now with more on the real estate industry and the credit behind it is Sanjeev Das. He is CEO of Caliber Home Loans, one of the largest privately held mortgage lenders in the country. Got a long history as well, Sanjeev. You and I spoke, I think, 15 years ago when you were at Citi Mortgage, so it's good to chat with you again. Obviously, the market is hot. Money is cheap. But how available is credit? Do you need 20% down? Do you need to have a 700-plus score? How available are loans right now?
The short answer is yes. You need to put money down and you need to have a good FICO score. And what we are seeing right now is that even though credit availability is really high, the FICO scores and the income levels are extremely high. Debt servicing levels are high. As you know, Caliber is one of the largest purchase lenders in the country. And so we are seeing very strong credit quality, very strong underwriting standards, mostly driven by the urban-suburban shift that Robert was just talking about, but also first-time home buyers coming into the market.
Yeah, and it's been incredible. We're hearing these stories, Sanjeev, about bidding wars now going on, and I'm thinking there's going to be a second derivative effect, I think, of this sort of almost panic buying in some ways. As people pay a lot for homes, it may elevate the comps, the comparables, and maybe people's appraisals. Do you see a longer-term dislocation on the mortgage bond side of the market from what's going on right now?
Not right now, Brian. Right now, I'm seeing it driven by the fundamentals of structural shifts between urban-suburban moves, and as I said, first-time home buyers coming into the market. We see that a lot at Caliber because we do purchase loans in such high proportions. But what I do see is, as I said, high FICO, good debt to servicing. I see it as more structural, Brian, and less speculative from when we talked the last time, which was 15 years ago.
Okay, well, that makes me feel good, Sanjeev, because we were worried about it, 10 or 15 years ago. So you don't see problems coming from this. You don't see sort of foolishness behind the scenes like we saw before 2008.
No, the industry has learned a lot. Consumers learned a lot. I see this as structural, not speculative, right now.
What's going to be the mortgage story and the real estate story, Sanjeev, of 2021?
Very strong in purchase. We are seeing the fundamentals of demographics, household formation. As I said, the structural urban-suburban shift. We see that as very, very strong phenomena. Obviously, whether this is a phenomenon or a structural change will depend on the length and duration of the pandemic. As I often say to people, pre-COVID, Brian, people were always concerned about taxes. What's happened is taxes were always the trigger. The pandemic was kind of the catalyst, and technology has been the big enabler. So 2021, in our opinion, is going to continue to see that transition and a very strong purchase market. But as you heard yesterday from some of the reports that were released from public mortgage companies, refinancing is also very strong. About 8 to 9 trillion of mortgage holders in the country still have a mortgage that's refinanceable.